Good afternoon and welcome to Nasdaq Trade Talks. I'm your host Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Brian Joyce, managing director of Nasdaq's market intelligence desk. We're going to do some chart work looking at the euro. Great to have you as always. We've had a crazy day today.
It's been a busy
haven't
day,
we, Brian?
Yes, a lot of IPOs.
And you know what? Let's talk about some European data, because within the media narrative, we're hearing about the U.S. looks so much better than European data. But if we take a look at those charts, that's telling me something very different.
Yeah, it seems we could be at a turning point here. So the Citigroup Economic Surprise Indices measure economic data versus expectations. The top half of the chart here is in the United States, and the bottom half is Europe. So Europe, as well aware, has been slowing down and having a difficult time finding growth for a couple of years now. And so, but what this shows here is that the Economic Surprise Index bottomed in January and is now trending higher, and recently in March made a 5-month high. Had a bit of a pullback here at the end of the month, but we're now kind of trending higher again. Whereas here in the United States, the economic data is making new lows as of last week. So the data that's coming out is coming in below expectations.
All right, now that's the fundamental story. If we take a look at the chart over here, this is the euro versus the USD. There's a pattern that kind of falls in line with that chart, what you saw in 2017, what's setting up for 2019. Walk us through this.
So as you can see here, this is the euro-US dollar. So when it's declining, the euro is declining in value versus the US dollar, the greenback. What's interesting here is the price action over the last, let's say, 5 months or so has been coiling around this 112, 113 level and hasn't really moved anywhere. We know from looking at the weekly commitment of trader data that non-commercials are very short the euro against the dollar, the most since late 2016, which is not that long ago. But when that trade unwound in 17, the euro gained 14%, which was the biggest annual gain for the euro since 2003. It was a massive move, and that was actually very good for risk assets, whether it's and all basically overseas global assets. The emerging markets ETF was up 38%. Hong Kong was up over 40%. Vietnam, Turkey, all of these emerging economies did very, very well. So the conclusion here is that we have a lot of investors on one side of the boat. So the risk is that something could trigger that unwind. The coiling price action is it's not coiling because I say so, or maybe it appears so to the trained eye, but you can measure that either by the average true range, which is at a 23-year low, or the Bollinger Bands, which are at a 40-year low. The bands have not been this narrow since the mid-1970s. So what happens is when you have tight range compression for an extended period of time, eventually when that reverses, you have expansion. And generally what happens there regarding the price action is you're going from a trend of consolidation or price action where you're consolidating, and it transitions to trending price action. So my expectation is we're going to see some additional economic data or some trade agreements, or maybe we resolve something with the auto towers that could be coming down the pipeline, that investors all of a sudden become much less bearish. They're now fearful of their short positions. They go to unwind it, and you have a perfect storm here, so to speak, of where you can have really explosive price action to the upside in the euro, downside in the dollar. If that was the case, I think it would be a big positive for risk assets.
It's almost like the chicken before the egg argument when you look at fundamentals and also when you look at the charts, because it really does, the fundamentals are really aligning with what you're seeing on the charts right now, because that really is the next narrative, what's going to happen with European tariffs. And it's a little bit counterintuitive. We saw it with the US and China trade deal. Every time there was a tweet or a headline that came out, that's where we got that bullish action in the market. So is European tariffs, is that going to be the next leg up in the market? Exactly.
And I think China is a good reference because we just saw some positive GDP data come out from China a day or two ago, and then we saw the brokers on the street, Morgan Stanley, UBS, both of them raised their expectations for GDP for 2019 in China. But if you look at the price action, the Hong Kong index and the Shanghai Composite are both up 30-35% on the year already. So price action is certainly leading the fundamentals overseas in Asia.
Yeah, you identified that the other day in the technical take. Thank you so much, Brian, as always, for joining me at MarketSite. And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.